Good morning. You're watching Daybreak on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. Asian stocks have begun the day's trade on a muted note. The dollar remains weak while oil prices continue their upswing. Sun Pharma, in an analyst con call, says that it has not received any query from the market regulator SEBI relating to a whistleblower complaint, adding that they aim to raise the standard of corporate governance. Unilever will take over GSK's nutrition business and merge their Indian units in a deal worth over 30,000 crore rupees. GSK shareholders will get 4.39 shares of HUL for every share held. The National Company Law Tribunal has restrained 9 former IL&FS board directors from selling or pledging any of their movable and immovable assets, at least till the next hearing in January. And ANI reports that the level 3 fire that broke out last evening in Goregaon has now been doused. Let's talk about US markets now. US stocks closed higher on Monday, with the S&P 500 having its best start to December in 8 years. That's after the US and China over the weekend called a truce in their trade war, triggering a distinct risk-on tone in most global equities and in particular on Wall Street. Bloomberg's Sue Keenan has this report.
U.S. stocks rallied across the board on optimism that the U.S. and China reached a temporary truce on the trade front, although despite a very strong opening, they closed off the highs of the session. Meanwhile, the dollar weakened and oil gained. Now, a portion of the U.S. yield curve inverted for the first time in more than a decade, the 3- and 5-year. And what that signals is that the market is sending a message to the Fed that the tightening cycle is approaching its end. Notably, President Trump's advisors throughout the day seemed to struggle to provide any specifics on the so-called agreement between the U.S. and China, although his economic advisor, Larry Kudlow, did say that the U.S. and China are, quote, pretty close to a deal on tech theft. Meanwhile, we saw oil stocks surge as the underlying commodity West Texas Intermediate also rallied. At one point, the oil futures were up as much as almost 6%. They managed to close with a gain of 4%, and that's a big bounce back from the worst monthly loss in a decade. In New York, Sue Keenan, Bloomberg News.
All right, and it was those oil prices, in fact, that weighed down on our markets yesterday. We'll get to that very shortly. Before that, let's take a check on everything that's happening in Asia this morning. Bloomberg's Rosalind Chin is joining us live from Hong Kong. Good morning, Rosalind. Well, it seems like that brief rally that we saw yesterday is short-lived. Most of the markets are opening in the red today.
That's right. It seems that glow from the trade truce that was agreed, or perhaps not so much agreed, as we'll investigate in a moment, between the US and China is already starting to rub off a little bit, and we're seeing the markets turn into the red. So the MSCI Asia Pacific Index trading lower by about 0.5% at this hour. All the major indices pointing in the red and trading in the red at this point in time. Investors starting to question really the substance of that US-China trade meeting and what came of it, because there was no joint statement that came out after it, so nothing written down on paper, and both sides, it does seem, are starting to present their own spin or their own versions of what actually was agreed at that particular meeting. So the shine already coming off on that. So right now we're looking at the Nikkei trading low by 0.5%, the Topix down by 0.8%, Hang Seng down by 0.5%, Shanghai Composite also lower by just over 0.25%. We did see some $325 billion in market value added yesterday, though, to Asian stocks. So we'll see what the hangover is from that by the end of the week. There have been concerns about US rates increasing against this backdrop of slowing growth. So that's been indicated by the yield curve flattening. We did see some of that over the last couple of years. We saw 3-year yields climbing above 5 years yesterday, so overnight rather, in Wall Street. As was mentioned, we saw oil, of course, extending grains right now. Brent at $62.05 and WTI at $53.34. We must note also this week that the US markets will be closed on Wednesday. Wednesday has been marked as a national day of mourning for the death of former President George H.W. Bush. So US markets will be closed on that day. That, of course, generally will affect Asia on Thursday. But that's how the markets here in Asia are looking at this point in time. Back to you.
Thanks so much for that, Rosalind. Well, let's turn to India and, to say that it was a bit of a spoil sport, I'm talking about oil, of course, would be a bit of an understatement. There's still concerns there. Agam Vakil is joining us here to tell you all about the trade setup for the day and also to tell you what's happening in the futures and options space. Agam, well, how are we looking today and what are the levels we're looking at?
Sure. So again, it'll be 10,900. That's the most important level to watch out for on the Nifty. And well, the SGX Nifty is indicating some amount of weakness coming through on the back of the kind of cues that we're seeing in the Asian markets. And well, that's what you have in terms of SGX Nifty. So we did see flattish moves across the benchmark indices. However, we did see the small cap and the mid cap indices advance and outperform. The Nifty PSU banking index did advance by around 1%, but the private sector banks did bear down on something like the Nifty banking index. And well, we did have gains in the Nifty IT index. On the other hand, considerable weakness in the pharma space. Of course, this was largely on account of weakness in Sun Pharma that we saw come through. But in terms of ADRs, we did see advances in Vedanta, Tata Motors, Infosys, and Wipro. On the other hand, we saw weakness in HDFC Bank and Dr. Reddy's along with ICICI Bank. Now, coming down to institutional flows, again, FII has bought a flow of equity worth at around nearly 300 crores, and DI has bought equity, rather sold equity worth 800 crores on a net basis. But when it comes to your contributors, Sun Pharma clearly was the one which was bearing down on the indices, considering that 7.5–8% drop there, and Reliance Industries and HDFC Bank also bearing down. On the other hand, HUL keeping the indices higher, considering its merger with GSK Consumer Healthcare, Indiabulls Housing Finance, and Maruti Suzuki also among those which were providing some support to the Nifty. But let's take a look at the futures and options space. And again, 2% increase in open interest for the Nifty futures, with the Bank Nifty futures seeing a decline of around 2%. And what we're also seeing is in terms of changes in open interest, well, the same range remains at around 10,500 on the lower end and 11,000 on the higher end. And in terms of changes in open interest, we've seen a lot of changes in the 10,000, rather the 11,000 mark, as you can see more writing there, and 11,500 put seeing a little more writing coming through. And well, your India Wix declined by around nearly 5%, now below the mark of 19 at around 18.2. The Nifty put call ratio at around 1.68. The Nifty banking put call ratio at a neutral level of 1.01. No changes in or no entrance in the band, but Kaveri Seed Company did see fresh longs. Along with Kaveri Seed, we also have Arvind, which actually declined. We saw fresh shorts with an accumulation of 9% in open interest, and the LIC Housing also seeing fresh shorts. So once again, it was yet another day of mixed cues, Alex, and we continue to watch out for the indices.
Absolutely. All right, well, let's move on now and talk about the rupee. The rupee fell sharply on Monday, weakening past that 70 per dollar mark on account of that spike in crude oil prices that you saw. The rupee, in fact, ended at 70.46 to a dollar, down about 88 paise from the previous close. Investors will obviously very closely watch the outcomes of the key Reserve Bank of India MPC, that's Monetary Policy Committee, and OPEC meetings that are happening just a short while from now, a couple of days away. On the other hand, the dollar gained strength after the US and China agreed to put off imposition of higher tariffs that happened over the weekend from the 1st of January, while entering a 90-day period of talks to bring an end to the dispute. The Indonesian rupiah rose 0.4% despite comments from President Joko Widodo that Indonesia needs a stronger dollar to boost exports. China's yuan advanced 0.6% against the dollar and was the second best performer. Now let's talk about one of the big updates from last evening. Sun Pharmaceuticals promoter Dilip Sangvi has denied allegations of insider trading and poor corporate governance at India's largest drug maker. Remember that stock tumbled 13% after a report that SEBI may reopen its probe against the company and some of its promoters for various lapses. Now Sangvi addressed investors and tried to allay some of their concerns at a conference call last evening. Darshan Mehta is joining us. In fact, he was listening into that conference call, so he's best placed to tell you if those questions were answered. Darshan, good morning.
Good morning. So basically, the conference call was done because of two events. First of all, the Macquarie sales note that came in that highlighted several issues of corporate governance. And secondly, they wanted to address the Press Trust of India report that came out in terms of reopening of the whistleblower, because of the whistleblower coming in, reopening of the insider trading issue that Sun Pharma had settled in 2017. Now on all parameters, so Dilip Sanghvi was able to address all the issues of the Macquarie note. Majority of the queries were related to unsecured loans given to non-related party. The second one was on the SEBI issue, and the third one was Aditya Medisales. Now I'll take you through them. On the insider trading and the whistleblower case, Dilip Sanghvi has said that they have not received any kind of communication from SEBI regarding this whistleblower or reopening of the insider trading case, and that's why they will not be able to comment on it. What he said was that, in 2017, a fine of 18 lakhs was paid and the case was settled. They're saying there was no insider trading, but a mismatch of timing which led to this penalty. So it was something that they pleaded not guilty to it, and because of the cost escalations they would have to face because of legal issues, they decided to just pay the penalty and get over with the case. So that was the case. Analysts believe that till the time there's no clarity on this 150-pager report from the whistleblower, there could be an overhang on the stock. The second one was Aditya Medisales. Now Aditya Medisales is the company via which all the domestic operations of Sun Pharma are routed through. The Macquarie note had put in issues that why is this done and why in FY18 was this put in as a related party and not before this. Dilip Sanghvi said that since the consolidation happened in FY18, that is why Aditya Medisales was put in as a related party in FY18 and not before that. But he said that if there are investor concerns, and he said that this was done mainly on account of tax benefits that the company is getting in. But he clarified that all options are open. Probably Sun Pharma may take over the distribution arm, or Sun Pharma may buy out Aditya Medisales at the cost price, and that is something if investors want to do that. And the final one was this $305 million loan that they had given to a non-related party. This happened in FY18. Dilip Sanghvi said that it was given because of guarantees that were there. He was hopeful that this loan will come back, but he did not disclose who this party was. But he said that this was related to the pharma sector. It was given at arm's length and at interest rate. So that is the only thing in which clarity didn't come out, who this party was, to this why and this loan was given. So that was this. But apart from it, all the other queries were pretty much answered by Dilip Sanghvi.
All right, thanks so much for that, Darshan. Now, let's go on to a story that we've been tracking for some time. Unilever will be taking over GSK's nutrition business and will merge their Indian entities. The deal values GSK's healthcare business at over 30,000 crore rupees. GSK will now own 5.7% stake in HUL post the merger. Agam Vakil has been tracking this deal and also everything that it implies. Agam, what does this mean for the shareholders for both the entities?
Sure. So, Alex, I'm going to start off with the brands that how they are split between Unilever and Hindustan Unilever. So, brands such as Boost, Maltova, and Viva will be owned by Hindustan Unilever. On the other hand, the brand Horlicks will be owned by Unilever, that is the parent company. And how it works is that while Horlicks will register, should I say, revenues with Hindustan Unilever, HUL will pay a royalty of around 1.75 to 4.25% to Unilever Limited. That said, what works out for HUL's favor in terms of the merger is, of course, the acquisition gives scale to HUL's food and refreshment business, and it also adds the health food drinks category into Hindustan Unilever. It also has a penetration of around 24% overall and a 14% penetration of in the rural markets, which means that while they do have a substantial presence, there is still a long way to go in terms of growth as far as penetration is concerned, and that's the opportunity there. And well, after the merger, it seems that together the food and refreshment segment will contribute as much as 10,000 crores to the top line for Hindustan Unilever. There are, however, some cons to this deal, as according to brokerages, they suggest that firstly, the HFD segment, that is the health food drink segment, is a specialized category. It's something that HUL doesn't have a lot of expertise in, so HUL is going to have to work on this. Its own track record in this particular segment has been very modest, and while GSK's past 5-year CAGR has come to around 8% in terms of revenues and 3% in volumes, this is not up as much as what we've seen for HUL. Again, while revenues at around 8%, the volumes have been slightly better for around 5%. And again, HFD at this point of time is not a high growth category. And the overhang of sizable share sale by GSK eventually after the completion of the merger and integration issues may be among many other challenges that may be something that HUL will have to deal with. But on the whole host of reports that I've read, well, they are neutral on the stock of HUL, and they are saying that it's largely positive.
Agam. Now, there are also some comments that came out from a conference call with the HUL management. Here's some of what they said.
The Boost is a brand which is owned by the Consumer India company. Yeah. So to that extent, there is no royalty on Boost. On Horlicks today, depending on the variant, there are range of rates which are in place, ranging from 1.8% going up to 4.5%. We will have to work that through. Yes, in a sense that Unilever will own the brand and we will have to pay a royalty, and we will. Having said that, we also need to work out the SEBI guideline and their implications, which will come through from 1st of April. So there are a few moving pieces which need to be worked through. Yeah. Yes, but Horlicks, there will be a royalty payout.
Well, I think it's a very good deal, and we're very pleased to take equity in Hindustan Unilever. We have said in our press release that we intend to sell down that equity at the right moment. We expect the transaction to complete by the end of 2019, and after that we will decide the right moment to sell our stake, which will be about 5.7% of Hindustan Unilever. It's a very big company, as you know. It's a very liquid company, so that should certainly be possible to do. I'm not going to predict now the timing of when we do that, but we would expect to monetize the stake and return the cash to GSK at the appropriate time.
Well, I do remember that we have detailed reports on that deal on the website, so you can check it out. That's bloombergquint.com. For now, let's turn to another story. The Mumbai NCLT has barred former board directors, 9 of them in fact, of IL&FS from selling their movable and immovable assets. The tribunal, which was hearing a plea filed by the government, has asked all respondents to file a reply in 3 weeks. Ridhima Saxena was in the courtroom when the interim order was read out. Here's her report.
The Serious Fraud Investigation Office report that was submitted to the NCLT found that the 9 officials that are now being restrained from selling or pledging any of their personal assets were also the key decision makers for the holding company and its subsidiaries. This, according to the report, led to undermining of the interest of the subsidiary companies and associate ventures, which acted only as departments of the holding firm rather than functioning as independent separate entities. The report also alleged that the top officials at the group showed profitable and decorated financials, which hid the depleted financial condition of the holding company, as well as this was done to avoid breach of regulatory ceiling to create leverage on the company's books and also to obtain high credit ratings. The report also found that 46 overseas subsidiaries of the companies could not be located or had ceased to be subsidiaries of IL&FS, for which the court has asked Ministry of Corporate Affairs to submit a detailed affidavit on how these companies had vanished within 15 days from December 3rd.
And we'll bring you all the updates from that story as well. But for now, let's turn to Yash Upadhyay, who's joining us with all the stocks that you have to watch out for on trade today. Yash, good morning. What do you have on your list today?
Morning, Alex. Let me first start off with Uflex Limited. When the company's global film manufacturing arm has received the patent from United States for a period of 20 years, covering the entire range of its BOPT film line. Also, with this, the company receives exclusive rights to manufacture these special types of BOPT films in United States, Europe, and India. Welspun Enterprises will be in focus as well after the company has signed an agreement with the NHAI for the construction of a 4-lane highway project in the state of Tamil Nadu on a hybrid annuity model, with the total cost of the project being close to 2,000 crore rupees. NCC has come out with an update with respect to their order book situation for the month of November, wherein they have received close to two orders, one for about 174 crores pertaining to their electrical business and another of about 46 crores for their water division. So in total, some 220 crore rupees of orders that they've won in the month of November. Omax Autos will be in focus as well after the company has approved the setting up of a new manufacturing line for the manufacturing of auto components in the state of Uttar Pradesh for a total investment of about 165 crore rupees. Ramki Infra, that one has completed the 100% sale of its stake in NAM Expressways to Cube Highways Singapore. Now with this, the consolidated debt of the company, which stands at about 2,970 crores, will reduce by as much as 1,559 crore rupees. So almost the halving of their total debt. And VST Tillers reported their November tractor sales numbers, a disappointing set at that, 6.5% degrowth in volumes, coming in at about 2,736 units versus 2,922 for the same month last year.
All right, thanks so much for that, Yash. Now, this is probably bad news for all of you who like to take those energy drinks to keep your energy levels up. The government is likely to impose a compensation cess on energy drinks that contain caffeine. The proposal may be mulled over the next GST Council meet. Nikunj Ori has more details in this report.
The government is considering to impose compensation cess of around 12 to 15% on energy drinks that contain caffeine, like Red Bull and Monster Energy. Currently, there's no compensation cess that is levied on such drinks, and these energy drinks are classified under the segment of non-alcoholic beverages and attract only a GST of 18%. Now, the proposal is to include energy drinks under the ambit of GST compensation to States Act, and also to increase GST on energy drinks from 18% to 28%. Now, this proposal is being considered to remove the anomaly that cold drinks attract a tax of 40%, that is 28% GST and 12% compensation cess, while energy drinks that contain caffeine are taxed at only 18%, despite warnings being issued on their consumption by World Health Organization. Now, this proposal will be considered in the next GST Council meeting, and the amendments to the Act are expected to be tabled along with other budget proposals. This move of increasing GST and also levying compensation cess on energy drinks is expected to fetch around 150 crore rupees to the government.
All right, there are several stories that are currently available on the website bloombergquint.com. Of course, you'll find all the live market action, all the updates, not just from the Indian markets, but also from the international markets over the course of the day on Bloomberg Quint Live. But as of now, if you look up the website, here are a couple of stories that you definitely should read. In international news, there's some confusion about Chinese tariffs on automobiles. Treasury Secretary Steven Mnuchin said China has agreed to eliminate tariffs on imported automobiles, but declined to give details after President Donald Trump jolted car stocks by announcing a deal that a deal has been reached. Trump said in a tweet late on Sunday that China agreed to reduce and remove tariffs on American-made vehicles, raising more questions about the outcome of his meeting with counterpart Xi Jinping during the Group of 20 meeting in Argentina. It's unclear whether China would reduce its car tariffs immediately or as a result of a broader deal. But in a briefing in Beijing only a few hours after the tweet, China's Foreign Ministry spokesperson Geng Shuang declined to comment on any car tariff changes. Now, sticking with news on automakers, former Nissan Motor co-chairman Carlos Ghosn faces likely re-arrest next week as Tokyo prosecutors add a fresh claim that he understated his income by more than previously reported. Now, that's according to a Japanese media statement. Let's talk about some other news now. Ajay Narayan Jha will take over as Finance Secretary. He is also the Expenditure Secretary. A 1982 batch IAS officer from the Manipur Tripura cadre, Jha takes over at a time when the ministry is heading into quarantine before the presentation of the budget in February. Now, while some rivals appear set to launch hardware to support the nascent 5G wireless technology in 2019 at some point, Apple looks like it's going to take more than that time. In fact, you might just have to wait till 2020. Here's why. Well, that's all we have for you in this edition of Daybreak. But up next is All You Need to Know. Do have an absolutely lovely day and share it with us on Bloomberg Quint.